A poem by Jack Harlow. What is popping? Brand new whip just hopped in. I got options. Welcome to Funancialism, and on this channel we expand our wealth growth mindset. We have conversations about stocks, investing, and building wealth in general. In this video we're going to explore how to trade options and is it even worth it? When you're buying options, you are buying the ability to trade the stock in the future for the future price.
But mostly Wall Street goons profit off of it. Maybe that's why it's so well advertised.
The price of an option is determined by three things. We got a cool $90.09. This is ultra rare. You may not have $300,000 to buy 100 shares of Amazon, but you may have $3,000 to buy that much in Amazon options. And if you think these types of videos should exist, then don't forget to like and subscribe. Thank you. This video concept idea was inspired by Rita Soledad. I practiced that quite a bit. And Berna from Hey Berna. We also got a dinosaur right over there. Scary. Now, Rita Soledad, she is a CFO and her family managing some interesting employees' children. She has two, I believe, and she's doing a fantastic job. She also opened her Roth IRA this year, so congratulations to her. Huge inspiration to me, and you should definitely follow her. Berna from Hey Berna is an internet superstar. She was featured on Forbes and a lot of other cool places. She is reaching an audience where not a lot of effort has been made to reach them. I'm talking about marginalized groups of people. I don't know why these groups of people haven't been reached out to when it comes to personal finance. It might have something to do with the institutionalized and systemic racism that has been plaguing this nation since before it was even created. So definitely check her Instagram out and follow her if you don't already. So when it comes to investing, I know a lot of new investors are tempted by day trading and options trading. I'm gonna put this as a disclaimer right now. I have day traded, but I have never done options trading. However, I'm familiar with options trading, and the goal of this video is to break it down in as simple way as possible.
It's going to work, right? I'm not so sure about that.
Now, investing traditionally is about buying and holding something that provides value for a long period of time. Trading is more about buying something and just hoping that someone comes along and pays more for it. Trading is built on the principles of buy low, sell high.
But mostly Wall Street goons profit off of it. Maybe that's why it's so well advertised.
And a lot of young investors jump right into it because it's always put in front of their faces and high profits and returns are promised, but they never happen because most traders actually end up losing their first year, and after 5 years it's almost like 99% of day traders tend to lose, and that includes people who trade options. So if you're interested in trading options, know that some investing OGs such as Warren Buffett may not call that investing. I certainly don't. It is closer to gambling than anything, although of course there is math and probabilities and some research involved that can increase your chances of having a successful options trade. An option is you buying the ability to trade a stock in the future based on your guess of it going up or down, right? Okay, so when I first started researching this, it kind of confused me, but let's break it down together. So when it comes to options, there's two types. There's a call and a put. A call is when you think that a stock is going to increase in price in the future, so you bet on it increasing, while a put is you betting that a stock will decrease in the future, so you're betting on it decreasing. Now, what makes options trading a little bit more dangerous than your typical day trading is that instead of that buy low and sell high element, there is a how long am I going to hold this option? A lot of us can probably predict that Amazon will be higher than it is trading for today in the future.
Amazon will be $6,000 a share.
And I think a majority of us believe that it will. When it comes to options, we actually have to guess by when will that happen. So that's part of how options work. Let's break it down even further. When you're buying options, You are buying the ability to trade the stock in the future for the future price. I'm going to repeat that a couple times through this video because that's the main punchline. When purchasing options, you're forced to buy the ability to trade at least 100 shares of a company. What allures so many people into options is you may not have $300,000 to buy 100 shares of Amazon, but you may have $3,000 to buy that much in Amazon options. The price of an option is determined by three things. Number one, the intrinsic value. This is the difference between how much the stock costs today versus the number that you're predicting it will be in the future. If a stock is trading for $50 and you think it will be trading for $60 in the future, the intrinsic value is $10. Number two, time. How much time are you buying this option for? If you buy a week, your option will be a lot cheaper than buying it for a year because the odds of you hitting the price that you think that the stock will be is a lot higher the more time you purchase. Remember, we all pretty much agree that one day Amazon has a high probability of being a $5,000 stock. But we just don't know when that will happen. If we say it'll happen in the next week, our option will be extremely cheap. If we say it'll be in the next 5 years, the option price will be much higher because the probability of Amazon reaching 5K in the next 5 years is also a lot higher than it reaching it in the next week. Number three is the stock's volatility. Volatility means how much does the stock go up and down on a daily basis. One of my favorite stocks is Overstock, an online retail business that sells furniture, home decorations, and all of that. They also have a really cool blockchain technology aspect to their company, and they've developed a brokerage where you can buy and trade stocks, which is pretty cool for a company because those are two extremely diverse industries, and I could go on and on about that. And if you're curious about Overstock and all the amazing things that it's doing, it's one of the stocks that I analyze over here in my Charles Schwab portfolio review, where I used my stimulus check to purchase stocks. And one of them was Overstock, which, by the way, almost times 20 in price. Anyways, with a stock like Overstock, it can be $40 one day and then $50 the next day. That is a 25% increase, which means the option may be higher because the probability of it hitting the price that you think it's going to hit is a lot higher because it swings a lot more. The odds of Amazon swinging 20% in a day is a lot lower than Overstock. So when it comes to volatility, that will definitely be weighed more on the price of the option. Pretty much that is all there is to option trading, but I'm going to do one more thing and give you a live example of when I think it would have been appropriate to use options trading, where the probability seemed incredibly high for you to be correct within a certain amount of time. Oh my gosh, when that sound hits, you know what that means. It means that I'm forced to show you my rare stock shot collection. These are incredible photos that I have captured of stocks that just the numbers, the patterns, it was just so amazing and incredible. I cannot not share this. I have to reveal to the world these incredibly rare stock shot photos. This can be a great hobby for a lot of investors or just people who want to bird watch but can't because, we're supposed to stay indoors right now. So this is my type of bird watching where you do it from inside your home on your phone or computer and you just find these ultra rare photos of stock prices. Check this out. Alright, let's check these rare stock photos out. This is going to be so awesome. Right here on Robinhood, I have $58.58. What a combination. Really rare. You cannot contrive that. Moving on, we got a cool $90.09. This is ultra rare. Wow, Match.com, thank you for that. Okay, NASDAQ at 0%, and it's red, not green, but red. It should be gray because it's neutral, but these are just some cool stock photos that I found this week. Back to the examples. We're going to take a look at options trading when it comes to the company Disney. Disney has been around for decades. It's a very stable company. Of course, last year it made a really big move diversifying further what it does as a corporation, and it went further into streaming. And I, of course, am talking about the rollout of Disney Plus. Now, before it rolled out and launched, there was an announcement that it would roll out and launch. As soon as that announcement hit, Disney stock went from about, I want to say, $120 to $135 in a single day. It just skyrocketed that much. Now, me as a long-term investor, I kind of have a feel for things now, and I could probably say that Disney is going to drop because people are buying the hype. There is no evidence that Disney Plus will be successful yet. There are still months until its release, so it would be a cool time to bet against Disney, because a lot of people who have been holding Disney might see, wow, finally it went up 15% in a day. This is my time to sell. So I would do a put option. Another way for describing a put is shorting a stock, also known as betting against it. Now let's say shorting Disney for a 1 month period cost $4 per stocks. Remember, when it comes to options, you are buying the ability to trade 100 stocks in the future. That would be $400 for that option put. Now I'm betting that after the Disney Plus announcement and that huge increase in stock price from 120 to about 135-ish, that Disney will crash back down to 110. That Disney will crash back down to the 110s. So I will do my stock put, and I will be betting that Disney will come down to lower than $125 within the month. When Disney finally goes below 125, I can cash out. I will collect the difference between my predetermined price on the option put, which was 125, and what Disney is trading at. So for example, Disney dropped all the way down to $110, and the put that I put was $125, which means there's a $15 difference. At that point, I sell it and collect a profit of $15 per share. Now think about what just happened. Disney was selling for $110. I bought the right to trade it in the future for that price that I thought it was going to be lower than, which was $125. So while Disney is 110, I am able to trade it for 125. That's where my $15 per share comes from. And 15 times 100 is $1,500. And in this example, that $400 option turned into $1,500, almost tripling my profits. But high risk, high reward. What if it took Disney 3 months to reach a price lower than 125? Even though I was right that Disney was going to go down in value, even though I was right that it would go down in value in the near future, I still missed it by a month or two, and sometimes even a week or a day. And if you miss, you lose your money. All $400 disappear. So unless you have psychic powers, I would stay away from options trading, and this is not financial advice. This is just my opinion, a person on the internet. If you enjoyed that video and you like Jack Harlow, who is an epic rapper, please click one of these other videos around here somewhere and enjoy this financial content. Up your game up. Let's go invest in stocks and yourself.